Hey gang, Dennis Tubbergen here with more market analysis for you. Today is Tuesday, April the 10th, 2018. And today I want to share with you a bit about what the market did yesterday. I have up on the screen a chart of the S&P 500. This is a Japanese candlestick chart, which is, as you guys all know, my favorite way to analyze the market because you can learn so much from a chart. This is a 5-minute chart. So every bar on this chart represents 5 minutes. Here is the market open. Here is the market close. Now every one of those bars that are green represent a 5-minute time interval, a 5-minute time segment when the market was up for those 5 minutes. And the red bars represent 5 minutes where the market was down. Notice that the open here was at about, let's just call it 26.23. Notice that by afternoon time, this got as high as about 26.53. So if you take a look at that, the market was up pretty significantly, but then toward the end of the day, it really declined. All these red bars here show you that. And then look at the trading volume at the end of the day. A lot of selling at the end of the day. Now, you often see that at the end of each trading day. And there's an old market axiom that says that amateurs trade in the morning and professionals trade in the afternoon. So when you take a look, there's a lot of market selling that took place late in the day and a lot of volatility in the market. Now, my point for today is that whenever markets are transitioning, as I believe this market is, you do see a lot of volatility, a lot of price movement intraday. Now, if you take a look at this daily chart, and I were to go back and just put that in a day, this line right here represents the price action of yesterday. So the open was at the top of this particular red bar where you see my arrow. Prices went as high as the top end of this wick, as low as the bottom end of this wick, and it ended here. So whenever you see a lot of really long wicks on these candle charts, you know that there's a lot of volatility that's taking place. Now, if you look at all the wicks we've seen here of late, going all the way back to what I now believe the market highs are, which is January 26, you see a lot of bars, a lot of candles with really long wicks, which just shows you a lot of price volatility exists in the market. Now, if I go back and just take a look at the market top in 2008, right here at my arrow, this is actually 2007, October of 2007. This was the market high. And if you take a look, you see a lot of the same price action here. You see a lot of candles with a lot of wicks as the market is declining, a lot of volatility. Compare that, this side of the downtrend to the uptrend here, and you see a lot more wicks here, a lot more price volatility. So my point for today is that we have a lot of volatility in the markets. That's another sign, I believe, that markets are topping, and it's another reason to be cautious here. That's today's market analysis. I'm Dennis Tubbergen. It is Tuesday, April the 10th.